Very good evening, everyone. Welcome to Admiral Markets. Using the best filters in trading today is our topic. So we're going to be focusing on a lot of factors that might hinder us from trading, and those are probably even more important than reasons why we should take a trade or what could be good for a trade. Very important. But as always, the risk disclaimer explaining that trading foreign exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. So we all thank you for your attention on that. Once again, welcome to Admiral Markets. And my name is Chris. We got a special guest today, Michal. He's going to share some words with us, and then we're going to look at filters and explain a bit more about that topic. Good evening, Michal. All right, folks, sorry. I guess you didn't hear me because I was muted. Sorry about that. We're going to continue with the filter presentation. Sorry for that slow start. I was not able to hear Michal. Maybe you did, or maybe you didn't. Let me know if you can hear me at least. No, you were not able. Okay, I got some people saying no, but you can hear me. Okay, good. So sorry for that slow delay there, or delay and slow start, but today's goal is how to choose and use the best filters. And what is the role of the filters? Why use them at all, first of all? What are pretty good filters or quality filters? And which filters do we use specifically? Because there's a difference between, maybe just generally saying these are good and the ones we specifically use. So that's all lined up for today. And we're going to go through them one by one.
Hello guys, hello everyone. You will pardon me for my voice. I got the flu or something like that, a cold. So I will try to be very comprehensible. So we're going to talk today about Forex trading filters. I won't put an accent on those indicator filters, because you already know that there are many systems out there. There are many various indicators, many various combinations of indicators, and you need to test it thoroughly in various market conditions to be able to tell then a filter works or it doesn't work. I will mostly tell you what I use for filters, because as you already know, I trade price action and I use some maybe different things than most traders do, and especially I use those time filters and fundamental filters. Time filters are very important for me because they tell me just when I should and when I should not trade. Especially in Forex market. This doesn't have anything to do with stock market because I get many questions about stocks and futures options. Those are completely different kind of things. I need to say it again, that Forex trading is like driving a Formula One. It's very fast, it can be very dangerous, it can be very profitable. So basically, that's why we need to use especially time and fundamental filters. After time and fundamental filters, we need to use technical filters. But there are one major rule for that technical filter, and that is basically, I will tell you about it later, and that is most of the time it's very accurate. So let's start first with the time filters. Chris, you can move next slide. Move on to next slide. Yeah, time filters. This is very important for me, and especially I think most of you, because we are living in Central European Standard Time Zone. So let's say that we basically living in GMT time zone, because it's only +1 or +2 depending on whether we have daylight savings, winter light, or summer time. So basically we use GMT time zone for our trading. GMT time zone defines London and New York session. Okay. If you are living, let's say, New York, you need to get up very early to trade London, and most of the time it's very stressful. I have a friend from Brazil, and that friend of mine is really a good trader, but he had really a serious problem trading London session. The problem is that especially in Europe and in especially in America and South America, there are multiple platforms that give you false candlesticks, and now I will refer to that later. But that is one of the reasons why I prefer Algorithmic market platform, and why I generally prefer to trade within GMT time zone. Okay. If we live in GMT time zone, we would probably avoid trading Asian session. Let's say we are in same time zone, GMT to GMT +2. Okay. And if you want to trade Asian session, usually the best time to trade it is around, now is 6 o'clock. I will tell it by Central European Standard Time. It's usually around 2 or 2:30 early morning. So you need to get up, sorry, let's say that you need to get up early, 7, 8 o'clock. You'll want to trade London, and you have a trade. And basically, Asia session is very hard to trade because there is a range. So it's very, and you will have an easy feeling if you have, if you put, let's say, target price, take profit, and stop loss. Probably you will be in a profit, but it is very rare that you hit full potential, full TP, or full target price in Asia session. That is why we usually monitor our trades, especially if we get a little bit of leverage in our trades. So basically, what should we do? Yeah, I'm talking about GMT time zone. What should we do? We should always try to avoid trading in front of the screen during Asian sessions, because if you want to get up early, we will only have 5 hours of sleep. So whether you live in GMT or GMT +1 or GMT +2, as we are now, London currently is GMT +1. Soon we will be GMT +1, and London will be GMT very soon when winter daytime changes. So basically, what I'm trying to suggest, use a time filter. If you want to trade Asia, then you need to skip London session. yeah, this weekend probably we will have a change in time, so we will be GMT +1, London will be GMT, so our candlesticks will be most valid on Admiral Markets platform. So I just want to say that if you trade Asia session, then you need to sleep, and you will be probably skipping early London, and then sometimes from time to time that sometimes also happens to me, because if I trade Asia, well, then I'm not up for early London session. If you trade higher time frames, then you can try to use pending orders. One of those filters I want to use, and I use it from time to time, is putting pending orders on Camarilla indicator, H3 or L3. H3, because usually market opens in between L3 and H3 level on Camarilla, and you just want to sell or buy the very first trade. So if you want to sell, then you can put pending order on H3, and if you want to buy, you can put a pending order on L3, and probably during Asia session price will not hit stop loss. You will probably be in a sort of a profit during early London. So I suggest that if you want to trade Asia and you live in GMT time zone, then go for pending orders. Okay. Also, one of most important time filters is to avoid trading during bank holidays, because there are no support and resistance levels to be defended. What does that mean? I always say we follow big banks. Okay, you know that already. We are followers of big banks. Okay, and what that means is basically we follow them if we want to make profits. So the levels which they pick and trade, we need to follow it. When bank holidays are happening, then we should avoid to trade, because there are no banks to defend those support and resistance levels. And many money makers and retail traders will give false breakouts and probably false trend movements. So that is why we should avoid to trade during bank holidays. Many false movements, many false support and resistance can appear on the charts, because there are no banks to defend those levels. There are no big orders. So, as I already said, I prefer Admiral Markets platform due to London time zone. And candles differ by time zones. Now, let's say that you open another platform which has by default New York Standard Time or Washington or America or Southern America, doesn't matter. Candles will differ. But by the rule, London is most traded session. The biggest liquidity is in London session. So that is why we should use a London time zone, okay? And that is why I say Admiral Markets has a great platform we always get a full price and full price levels, the most valid and the most accurate. So just you can try to watch two different platforms, and you will see that candles differ. Really, they can differ a lot, okay? So that is why Australian traders want to trade their session or Asia session. It's very hard to trade London if you live in Australia, okay? So if you have a job, let's say a day job, then you need to use a time filter. Usually we trade, if you have a day job, we trade at the top of the hour. TOTH, it's called top of the hour. So we trade entries on 1 hour time frames, and we usually put stop loss, sorry, and TP, target price, just whether one of those two will be hit. Okay, that is for part-time trading. So you go by placing an order, and your order will either hit target price or it will hit stop loss. Then, if you can trade, let's say that you are able, even on your job, you are able to trade. You should avoid big trading during London lunch. when I traded during my day job, I will say that I need to hide away from my boss. Okay, I learned to trade and I traded really, and I was really having a big success with trading during those times. And during that was when euro started to fall down from 1.6 to 1 point, even 1.20 or 1.19. I remember, if I remember correctly. And that was the time when you all need to wait for retracement and short the euro dollar. And it was very funny, and so I had a really big success. I didn't have big account, but I had big success in that time of trading because it was simple. So I could trade on my day job, okay? But if you trade and if you are not able to hide from your boss and trade, then at least use that 1 hour time frame or higher time frame, okay? During London lunch, do not open big positions. London lunch is usually during London noon. It's 12 to 1:30 Central European Standard Time. Best volatility is during the first 3 hours of each session. And I always say that if you want to scalp, if you want to position yourself, if you want to swing scalp, the first 3 hours of each session are most profitable. What does that mean? That means the first 3 hours of London session, the first 3 hours of New York session. That is basically a cross session in between, okay? London and New York. So there are time filters which you should use to avoid getting whipsawed and avoid having, I can say, death by 1,000 cuts. If multiple stop losses get hit and you are using big leverage and your stop loss is very, very small, narrow, you can die by that of 1,000 cuts, your account. So you will get stopped out in succession, and probably that will be a, well, you already know that big leverage trades. So that is the time you should really avoid to trade during London lunch, because there are no many movements, there are no big movements. Usually there is positioning and then there is news, usually around 2:30 Central European Standard Time, like today. You saw it. It was a US dollar news trade balance, I think, and you know what happened. Basically, the price was jumping up and down. Then it was a false breakout to the upside, and then after the news, the price reversed to downside, and then again it went up. So what does it tell you? It tells you that you really need to avoid trading just prior to that. Just in between London lunch and prior to New York open. Usually when New York opens, big volatility will kick in and get you in your trade, probably in desired direction. So that is what I suggest about time filters. Now we need to go to fundamental filters. These guys, believe me, for me, these things are of better importance, and they're more important for me than any technical filters. Okay, technical filters are good if you plan to trade, and if you want to put a trade, then you use technical filters. But prior to that, you need to use time and fundamental filters. Okay, news calendar. You always need to have it, not on your platform. You need to have it opened in your favorite browser. Mine is Google Chrome, and I use it every day, so you need to have it open always on your browser, okay? And you need to check the news calendar. So if you want to trade Aussie, okay, and you know that Aussie news are around 3 a.m. and you want to trade those news release, and you want to trade that Asia session, then you shouldn't trade any Aussie. You shouldn't put any Aussie trades before that 3 a.m. Central European Standard Time. Usually that is the time for Aussie news. Also New Zealand news, around, I think it's around 12:30 or 12:45 So you need to avoid trading New Zealand dollar prior to that, okay? If you want to trade euro and you know that there is a German Jew sentiment around 10 o'clock, then don't trade prior to that, okay? Because traders will usually position themselves, okay? And they will wait for actual news release, and then you wait 15 minutes after that news, because there are many false movements. You saw the price today, euro dollar. The news for a dollar came very bad, okay? And what happened is probably most traders would think, okay, bad news for dollar, I would try to long euro dollar pair, okay? And what happened is euro dollar went to false breakout to 35.20, I think. No, sorry, 35, 38.25. And then it was rejected to 38, no, it was 37.84 or 81, I think. So those traders who got into that false breakout after the news spike, it's called news spike, they probably lost a part of their account. So we always need to try to avoid trading while those big news are active. Now many traders are asking me and have been asking me last 2 days what I think about euro dollar. Okay, if you follow the analysis, just a little digression, then I will get back to the main theme, to the main subject. I will make an analysis tomorrow. But if you ask me, I would really like to see some bigger retracement. Okay, so I would like to see daily candle at least closing below 38 or 37.85. Then we should get a retracement. Now this is just trading without any bigger retracement. It's not very good. So that is why I didn't do a full analysis on euro dollar today. Okay, but I told you try to sell near 38.30. So we got a great sell near 38.30. It was 38.25. So for everyone who got into sell, well done. Okay. Today I traded mostly Aussie dollar, so I didn't have many trades on euro dollar. Okay, NFP. I was also talking about NFP. NFP is very, very volatile news event. There are certain rules which should be followed when trading NFP. I will present, and I think that me and Chris have presented NFP rules, but I got many questions about that NFP trading. So I think that me and Chris should repeat the webinar again, and again tell you about those trading strategies during and post NFP. 4 years ago, ADP could also be traded as news release. Okay, today ADP is not very tradable. NFP is tradable, but is very, very volatile. That is why most of the traders don't trade. They don't just open any positions prior to NFP. Or if they open positions, they would probably close it if they are not trading intra-week or intra-month. Okay, if you're trading intraday, then close it. Because if you get caught into NFP spike, I promise you, you will probably be caught in a false movement. You can lose a lot of money in a mere 5 minutes. I am telling you from my personal experience, many times when I traded NFP, I got nice, successful trades. But also, even I can say more times, even more, I got caught into false moves. What does it mean? That means that if we trade NFP, the main rule of thumb is we need to wait for the first retracement. Prior to that rule, if you open trade immediately or you put pending orders above highs or above lows for NFP, how some traders suggested, the price can spike. Price can spike and collect your pending order. Then usually what will happen, it will go in reverse direction, okay? And probably you will get a psychological breakdown and close your trade manually. Because if you see that price was 10 pips in your favor and then reversed for 40 pips, okay, then you are losing 30 pips and more. you will probably manually close your trade. So that is why I don't trade prior to NFP. I can scalp, okay, few scalps, it's 5-minute trade, it's okay. But any positional trading during intraday price action on NFP is not suggested, okay? Also, one of my biggest rules for trading filters is avoid trading during ECB or Fed president speech. Usually there is a bid rate announcement. You know what bid rate is? Bid rate announcement. ECB or Fed will announce a next bid rate, and probably that sort of announcement, if it's unchanged, won't bring many traders into the trade, because traders want to trade speech, buy the rumor, sell the fact. So I don't recommend that. If you are listening carefully what Mr. Draghi or Mr. Bernanke is saying during the speech, you can be profitable. But usually those who trade during ECB or Fed are big hedge fund traders, big banks, speculative traders, we retail traders, and especially if you trade with institutional hedge funds, then we should avoid that. Okay, why? Because we don't have so much money to move the market like them. There, if I remember correctly, last ECB was 5 pips in 5 pips up and down in seconds. So during the first 5 minutes, the price went crazy, and we just need to avoid trading because we don't know what they are gonna say and what the price will do, because the price is following their words. Okay, and we cannot follow their words because we follow the price. If the price is following the words, the price is way ahead of us. We cannot run. We cannot reach it. So that is why we need the news to sell it down and then trade by the levels. If we want to trade after ECB or Fed, I just don't want to trade, and I don't like trading during those speeches. Cable or GBP crosses prior to 10:30 Central European Standard Time is not advisable. Why it's not advisable? Because cable news, usually GBP USD, I'm talking about British sterling pound, no matter the cross, what is it, GBP Swiss or GBP New Zealand or GBP USD mostly, GBP Japanese yen, it doesn't matter, because on 10:30 there is usually some big news for UK economy, okay? And prior to that, you will get many false movements of GBP and many small movements, so you cannot exploit the full price action. GBP price action is usually one way. After the news, it will spike up or it will spike down, okay? That is concerning GBP, and that is very big news spike, even more than euro dollar. That is, GBP has the biggest spike of all currencies. Bank holidays, that is very clear. Bank holidays, we don't trade it. There are no banks to defend support and resistance levels. Fundamental filter, same as time filter. We don't trade during bank holidays. At least I don't trade. 15 minutes after strong or red news, that means that if some news have been released, you need to wait for the news spike to settle down. What does it mean? That means that if some news pull or push the price up or down, you need to wait for the price to settle it down. That means to come to at least 78.6 or 88.6 retracement, and then try to exploit in the same direction of the spike. Probably the price will be testing that support or resistance again, but that will happen usually 5 to 15 minutes after strong news. If you want to trade the news, then you can do it after 5 minutes. If you want to trade post news, then you wait at least 15 minutes, because there will be many false movements during the time, okay? And you can get whipsawed. So those are major fundamental filters you should apply to your trading. And the last, but not the least, but from these filters, I can say that time and fundamental filters are more important than technical filters, because in technical trading we apply those filters only when we want to trade. So we will see now our slide about technical filters. But okay,
Yeah,
just
I'll
prior
just
to my technical filters, Chris want to say a few things about it. So
yeah,
remember, guys, always prior to applying technical filters, apply time and fundamental filters, and then when you want to trade, then of course you can apply the technical filters. Okay, Chris, go on.
exactly. No, the time filters are very important to have a realization of that, when to trade, and also not only when you're looking to trade, but also when you're in a trade. In fact, time factor can be a very good trading stop, as some of you know who are in the live trading room. But in any case, this is we're going to dive into some of my technical filters that I wanted to share with you. Most of them are more of discretionary way of trading. I don't have many non-discretionary filters, like for example an RSI, where I don't have any, in fact, as far as I know. An RSI that has to be exactly above 80 or higher, for example. Those are very clear black and white yes no filters. Those will not be mentioned here, but I'm sure they have value if you test them enough, as Tarantula says. And for example, the usual indicators all make sense in that regard, such as RSI. I will not be diving into that much, though. And one more warning in general before we dive into my filters is that you also want to be careful, if you do use those, not to over-combine them, because basically then eventually you might have not any trades opportunities left, because the filters will be filtering those out. And also watch out for, if you do add any filters, then make sure they have indeed a value and indeed produce a positive net result at the end of the day. Alrighty. So the role of filters, the technical filters. Well, basically within the structure of the market, right, when you look at the market, people are always trading with the trend, or trading a reversal, or trading a range, even if they maybe don't want to or are not aware of that. But that is just a fact. They're always assessing trading opportunities, right? In that regard, you're trying to see what movement would be an opportunity. But when you have done that, then you definitely want to control and check those filters, right? Is anything blocking the trade from materializing? Because there could be tons of good things on the charts that might seem interesting to trade, but a filter could definitely block the trade from going to your take profit. A rule that some traders use is, for example, try to find 3 good things that are good for a trade, but if you find one that isn't good for your trade, then that's not worth trading, right? So that's just to increase the likelihood that you're trading confluence. Find 3 good things, and find 1 good thing that doesn't work, of course, is a motivation to find a filter so that you see something in the charts that might not work. So you find a balance in between looking for opportunities and looking for things that might block the trade. Alrighty. So that's the role of filters. Now, if we're looking at the chart, there's of course tons of information there, especially if you use multiple time frame analysis, especially if you use tools and indicators and look at patterns, and that can be quite confusing. There's a whole world of things to digest, price action to digest and look to, and combining that is not the easiest. So basically, if you have that, it can have various effects, right? You could, for example, have paralysis of analysis, as I say here, right there. It could be an information overload. Now, that could cause you to trade very little or too much, because you see either dangers everywhere, maybe you're using too many filters, or you can actually overtrade and you're then not focusing maybe enough on filters to optimize the edge that we want and we need to succeed in Forex trading. So a trading plan will definitely help us with filtering that information. That's why we have strategies to digest the market in such a way that we can implement that edge. Because basically, the market is the market, and what we have is we overlay a plan so that when the market fits our trading plan, that's when we trade it, right? So that decreases the time needed to view the market, because if the market is not in sync with the trading plan, the environment, the desired environment we need or want in the trading plan, we quickly can move on to a other currency or a time frame, or just continue with our work, as Tarantula says, with our job, our daytime job, for example. So that reduces that time. So that's a good thing. It also reduces the ability or need to think very deeply about certain areas. Because if you think too much, then in fact that hinders the trade as well. In certain degree, thinking is good, but within the trading plan, because you want to think very thoroughly about your trading plan, but when executing your trading plan, thinking too much could definitely cause some stalls and some bad executions or failure to execute, in fact. So what basically it boils down to is that if you're looking at the charts, in a way you can always find reasons to take a trade. There's always in a way, if you look at a chart, there's always something, especially if you know a lot about indicators and tools and patterns, that could justify a potential idea. In a way, right? We can always build a case for that. And in that regard, if you then look for possible reasons that it might not work, then you start to see the other side of the coin, and you will look at the chart maybe in a different way than when you're trying to analyze the trend and you're trying to look for opportunities. Because then you're looking at it with the kind of a positive approach, saying, why would it work? While the filters is flipping it around and you're becoming a detective and saying, okay, why is it not going to work? And in that case, maybe you'll be forced to look for other aspects and things that you would not be able to think of beforehand. Yes, I think so, Libouche. I think that's definitely for beginners as well. I think filters is actually very important because it shows us when not to trade, and that's very important for all traders. So definitely. So just to emphasize, with filters we analyze why not to take a trade, and the reasons are there why a trade might not develop to target. So some time frames, because filters we might be able to use on different time frames, right? For example, and I have here an example down below. You want to, for example, choose a different configurations depending on the time. So, for example, a trend and entries could be different time frames, and a filter as well. What I would suggest is, what I use often for myself is one time frame, or maybe I check with the second. In some cases I have doubts for the trend. The entry would be one time frame lower, or maybe sometimes two. But the filters would be one time frame higher, for example, than the trend. So just to give an idea, a 4-hour, let's say we're looking at a 4-hour trend, then the filters, we could take a look at the day chart and see, are there any substantial support or resistances? Is there divergence on the chart? Is there anything of a trend line that could be blocking the chart? We'll dive into that a bit later. But basically, that would be the day chart. 4-hour chart could be the entry. The trend, and 1-hour chart could be the entry, for example. And another filter could actually be one time frame lower than the entry, or the entry itself. Well, yeah, because you could be looking at an overextended move on the lower time frame, and you might want to wait for a short time retracement, for example. That could happen too, right? Not only necessarily does a filter have to be a higher time frame, although of course you can discover essential support and resistance on that time frame. But you could even think about going to shorter time frame to see if anything is oversold or overbought, and see if you can get a bit of a retracement, just to maximize that reward to risk a bit more before jumping in. Before jumping in upon a break and not waiting for the pullback, for example. You can even use same time frames. You could even think about, for example, using the price action signals like a wick, for example. If you break out, but the breakout is with a massive wick, and you see a pin bar on the 4-hour chart, or 1-hour chart, well, then that could be a filter as well. So it doesn't have to be necessarily limited to higher or lower, but these are some examples that I use, how I use filters on different time frames compared to trend and entries. So that can be adjusted for your time frames as well. If you are not using 4 hours for a trend, but day chart for the trend, then you can use, for example, the weekly as resistance and use maybe the 1 hour as an overextension on the smaller time frame. So here's some practical example of the pound-dollar weekly chart, where we see not only a top trend line coming in, connecting the tops from earlier. You can't see the first one, but that's of course a important weekly resistance trend line. But we also see definitely major tops right in here and here, and the entire 162.60 and the 163.30 zone, more or less, is a big resistance, and we already rejected here once, and yeah, it's not going to be easy to break a level like that. Now, this is the second attempt, so maybe this time it will work, but obviously, especially the first time around, and probably even now, if you look at the level of importance, it's just a big level, right? Big resistance level. Same like here at the bottom when we couldn't break this bottom right there. And look, when you can't break a bottom or can't break a top, then the currency is going to challenge the next support or resistance. So, and that's what it did. It went all the way up to challenge the next resistance. In fact, it did stop here a bit, pause, but then continued up, right? Because that was just a smaller in-between level. Although it did get respected, didn't get enough follow through though, because the buyer stepped in here again. So it's always bouncing for support or resistance, right? Here and here, etc. So if you're a reversal trader, that could even be your entry, but if you're with the trend trader, it's a filter. So there are many different types of filters that we can look at, as I said. In fact, probably any tool or indicator or pattern can be a support or resistance. Can be a filter, excuse me. Bollinger Bands. You name it. All of these could, but I don't necessarily use them. So what I recommend are certain filters like trend lines, Fibonacci, divergence, tops and bottoms, fractals. Those are the ones that I mainly use, okay? Because for me, trend lines are indicating the direction, and trend lines are break or bounce spots. Moving averages I forgot to mention, but I, in fact, use heavily as well. Those could be filters. Well, I don't use them as filters. I use them as a trend more than a real support or and as support or resistance, but not as a filter, in fact. More as a potential to enter. Not so much as a filter. So it's more trend lines. Fibonacci, of course, a daily fib, for example, when price reaches that area, the likelihood of it just blasting through is small. We shouldn't necessarily plan on that. It could happen, of course. Sometimes price does exaggerate and move and break through a level unexpectedly or statistically not that likely. But that's why we shouldn't plan on it. All right, just that something happens maybe twice in 10 times doesn't mean that we should count on it in our trading plan. Divergence is definitely something I look at, and tops and bottoms and fractals. Fractals are just, it's an indicator, a fractal indicator. You can find it by going to indicators and go to Bill Williams, and then you'll find fractal indicators, and it just indicates, It's an easy way to spot tops and bottoms, so I don't have to strain my eyes to find those. Basically, when you have a fractal on top of a candle, that means that that candle high is higher than 2 candles to the left and 2 candles to the right at minimum. It could be more though, but shouldn't be less. So if you have a fractal at the bottom of a candle, that means that candle low is lower than 2 candles to the left and 2 candles to the right. Here 2 though could be more, but not less. So it could be 10 candles to the left and 20 candles to the right. And that particular candle has a fractal, and that particular low of the candle means that that's the the support level. So that's an important level because price bounced off that level and never went below it again within, let's say, 30 candles in this example. So 2 candles to the left, 2 candles to the right at minimum. And it will plot all those fractals on your chart. And it shows tops and bottoms. I mean, obviously we can look for tops and bottoms ourselves, and most of the important ones we see because price peaks at that spot, so obviously that's a top or bottom. And there will be a fractal as well. But with the fractals, we will see all of them, and in some cases, that might help. It makes it a bit easier to watch everything. Alrighty. So, especially support and resistance are filters that are good to look at because when price is approaching a support or resistance, there's no guarantee it's going to break through that. That's why targeting that support or resistance increases our odds of the trade materializing successfully. If we aim for a support or resistance that is above another support or resistance, then the chances of the currency reaching that level are just smaller. And if we aim 5 support or resistances down the road, then price would have to break through 5 times those levels, and the odds are just decreasing. Now, if we have an R2R that still justifies the lower percentage, okay, fine. But if we can, that's up to us, and the time frame, dependent on the time frames we trade as well. Sometimes we might have to do that. But if you have a decent R2R when approaching the next support and resistance, then the likelihood of that, us reaching that target is higher, and we can get out of that trade sooner. So that's why support and resistance is so important, because price respects those levels. All right. That's why also if price, for example, is close to a support or resistance, usually our risk is very, very high and our reward is too small. And the R2R basically then just doesn't match up in relationship to the success percentage. Now you do want to be careful with viewing every support or resistance on every chart as a potential obstacle, because there's going to be so many of those that will probably never trade. That's why I was talking about time frames before that already. Because if you look at, for example, a breakout, I think I have an example. Oh, I have it later on. So I'll talk about that a bit later. I have an example about a trading strategy of mine. For example, if you are trading a 4-hour chart, you definitely want to be careful of daily support and resistance, logically, because that's a higher time frame. But a 1-hour support or resistance, if you trade the 4-hour chart, is something that not necessarily is going to block that trade, right? Because then we will be filtering out everything. So with support and resistance, I tend to not look lower in time. I would only look lower in time for price action signals or overextensions of move on that time frame. Otherwise, yeah, it would be difficult to take a breakout trade, in fact. This is dollar CAD. We had a very strong downside right here. But what would block a downside trade right in here? Obviously, the bottom of the trend channel filter. I mean, that would be the filter, a trend channel. You wouldn't want to trade this to the downside. One could even argue that this is already a bit of a downtrend right here. but obviously there's a daily or weekly uptrend channel. If price is that close to the bottom of the channel, there's always a potential to bounce, just like it did here twice. And that's why it's good to have those filters in mind, because then you realize that this is not so tempting, in fact, to trade it to the downside, even though we had this down move, because price could be respecting that and bounce. All right, and we don't get that break or continuation to the downside at all, even though if you look at this part, some traders might be tempted to do that. Any shorts on here should definitely be filtered via that or through that trend channel. And if anything, one might even want to hunt for longs, if you use this trend channel at least. Otherwise, being neutral would be the best course of action. Some other examples of the euro-dollar daily. This is very recent. Of course, all of these are recent investors right now. And, well, obviously, when we're approaching 137.12 right in here, and we're reaching 136.90, do you want to go long at 136.90 if there's a daily top and yearly high at 137.11? No. So, obviously, that would be a filter for longs. How about the pound odd here? 50-minute chart. This was a bit longer back in September. But in any case, you can see I wanted to give you an example of maybe an overextension here on a lower time frame. This was a trend line, trying to trade a trend line break. And you can see this fell from 170.65, maybe all the way down to 170. So a 65 pip move in an hour is a decent move up. So you might want to wait for some correction, for example, before actually trading it to the downside. Right? That can happen if you look at the lower time frames and you see a bit of a strong move on the 5 or 15, depending on one time frame lower than you might want to enter normally, or even the same time frame. Then you might want to wait for the oscillator here to return to the zero line, or whatever oscillator you use, so that you have an idea that not only are we indeed making a downside motion, but we kind of paused a bit and caught our breath, because the currency also needs to catch its breath. It can't move forever in one direction before it continues. The odd USD is a perfect example of a filter, basically, when the currency got close to it here. We've been talking about the odd USD in our live trading room, and we were saying that there's always the potential here of a ABC correction up to, for example, the 382. That's what happened. Then we got a mild correction indicating that one more continuation up could happen, right? An extension. That's exactly what happened. And upon the break of the triangle, and that's what we were looking for, when this triangle breaks, we have a space from 94.80 to 97, 97.10 or 20, and that's exactly what happened. Within a few days, boom, right to target. But if you go long, or looking to go long right at 96.80, a few pips below this 50 fib and 272, that is definitely not a good idea because of the filter. The filter is the 50 fib, daily fib, and the target. The likelihood of price respecting that level is just so high that it doesn't make sense to go long right a few pips before that, right in front of that. It doesn't make sense. Unless you're really scalping a 1-minute chart, because then you would have that R2R still remaining. Right? Then you would have to really decrease to lower time frames and scalp it right up to that target, and then there's a high chance of a respect or reversal for that level. But if you're trading a higher time frame, you won't have that R2R right close to that level. And if you don't have that R2R, the only solution is not to trade it or to go down in multiple, in a lower time frame, so that you might find a setup configuration that does have that R2R. And if you're not used to that lower time frame, then just skip it and go to the next currency. But this is a prime example where you see daily engulfing twins right at that daily 50 fib, just like the 382 also caused a big substantial pause. That's why In some cases, of course, it might not happen, and we might just break through eventually or quickly, but it's not good to plan on that and count on that, and that's why you can see how important those filters are. So here's an example of one trading strategy. For example, if we're trading with the trend on the 4-hour chart, the opportunity is a pullback, and we can put a trend line on the pullback. So for example, this is the trend. We're looking for a pullback. We can put a trend line on top of the pullback. So let's zoom in to the red part. This is the pullback, which is the opportunity. We can put a trend line connecting the tops because we're in an uptrend. And what we're looking for is the trend line break here, right, for the upside continuation of this uptrend. So that's the example. In those cases, I would be looking for filters like the 4-hour and daily Fibonacci, daily, weekly tops and bottoms, daily, weekly trend lines, 4-hour and daily divergences as a warning, 1-hour, 4-hour price action if I'm trading a pullback, or even the breakout, in fact, and because you want to see a confirmation of that breakout, or if the 50-minute is oversold or overbought. Right? So those would be my list. As discussed basically beforehand. The Fibonacci, support and resistances, divergence, and lower time frames. So these are the things you can think of. And with this in mind, you will encounter breakouts that are typically more successful than, in my opinion, than if you wouldn't look at it. Now, sometimes you definitely have breakouts that would actually work out fine despite maybe a potential filter being relatively close by. That happens all the time, but it's always about statistics in the long run, not about 1 or 2 times, right? So that wraps it up from my side, in fact, and Tarantula is going to show other technical filters.
Yeah, technical filters. Nice way to present, Chris. So we need to mention technical filters. Technical filters are applied when we want to enter a trade. So prior to technical filters, we have time and fundamental filters. And if we want to go in a trade, then we use technical filters for technical analysis. Simple thing, using too much indicator filters is not good. The biggest thing there is the success ratio of overall system or strategy is measured by the most successful filter indicator. That means if, let's say, MACD is providing better signal filter for that particular strategy or system, then RSI or any other filter are obsolete. Why we should use then any other filter along with MACD? So that is example. If MACD provides 80% of filter signals for that particular strategy, RSI 70, stochastic 75, then overall performance will be only affected by MACD only because it provides 80% of filter signals. Other filters are obsolete. The biggest thing here, what I want to say is, don't use systems or strategies with many filters. That is a very, very bad thing to do. The best filter of all is to have price action or at least one technical tool. Let's say MACD or RSI. Moving averages, I don't use it as filter. I use it as dynamic support and resistance levels. So basically what I'm saying and what I'm implying is the biggest success of technical filters is only for that particular filter's overall success ratio. So any other filters will be obsolete. You will not get better signals if RSI provides 70% and stochastic 75. You won't get better signals than MACD because MACD provides 80%. That is just for information. Some systems are better with using RSI, some with MACD strategies. I call system strategies because we don't have a universal system that we can trade in all time frames or in all market conditions. So for me, technical filters. For myself, what I do is using MACD, candle configurations at importer levels, pin bars, and range bars. I won't talk now again about range bars because range bars are a completely different topic and completely different from standard price action. But I will just show you a few examples with MACD, candle configurations, and pin bars. Let's see our next slide. And on the next slide, I will show you a MACD filter. This is a part of trading scalping system which I presented yesterday on my webinar, and from time to time I also use it. So we can see how MACD captures the trend. It acts as a great filter. So let's see it, on this example. MACD captures perfect trend on this 5-minute time. And you can see that we won't take any short trade because MACD is filtering it. We will take trades around moving averages and also stochastic, but the main filter is MACD. So averages are dynamic indicators. MACD is a filter. Stochastic, which is this example, is our end signal. This is an example scalping system, and you can see how MACD filtered those trades perfectly. Also, MACD divergence is a great filter for a MACD strategy. I will repeat again, if both MAs of the MACD are above waterline, then we have a momentum. The signal above the waterline is stronger. Okay, MACD is momentum indicator, is a trend filter, and if higher time frame shows that MACD two lines are above waterline, then we know the overall picture of that currency time frame and the currency trend. So MACD is a great trend capture indicator. Conclusion is that you need only MACD and EMAs to be effective. Additional filters only make a mess on your charts. I just cannot watch all. From time to time I put a glance on other trader and analysis, and you know, some people call me that I may be arrogant or something. I am not arrogant. I just have my own way of trading. I'll calculate my technical analysis by myself. I don't I respect others' opinion, but me being a trader, it's very hard to apply other people's opinions on my trading station or on my trading strategy. If I do the analysis, that is what I want to see, and that is what I'm putting my eyes on. I just cannot imagine a chart with many indicators, with RSI, with MACD, with Bollinger Bands, with moving averages, with all other tools. That is just obsolete. Okay? MACD, as I say, divergence is a great filter for any MACD strategy. If we see a divergence usually around big levels, that means, especially longer time frames, that means that price will probably reverse. For on this example, I used two EMAs. Those are 34 and 55. Blue is 34, red is 55, and MACD is 39, 34, 89, 34. Okay, it's exponed. Okay, 34, 89, 34. Or for this strategy. Okay, I presented this strategy on yesterday's webinar, so you can watch the webinar. I think it's uploaded, so you can watch it again. Okay. Next thing is after MACD, we have candles and pins. So candles and pins are very important for trading. Here is the chart. Those are my red levels. I told you that my red levels are calculated by myself. Just a little digression. MACD 2 line, you need to Google for it. On MetaTrader 4 platform, it's not built by default, so you need to Google for it. Those are my red levels. Okay. It doesn't matter what chart is. It doesn't matter. It matters what they show. They show a clear picture. So we need to see a clear candle configurations close to their levels. We can see that this candle on the first arrow tried to go up the red level, but subsequently it was rejected, and then we saw a close. We saw basically a spinning stop candle close inside Bollinger Bands. That is the signal for a further depreciation of that currency pair. So you can see how the price was rejected. Second candle is again false breakout. Okay, it's false breakout. You can see that, but the second candle is a way better because it shows us that the candle closed below red level, and it could have been a sort of dragon doji, but we can see that the price has indeed broke out to the upside falsely, but closed below that level. Then after the retest, we saw a breakout pullback continuation pattern on that second arrow. This third arrow. Fourth arrow, shooting star of the red level. Shooting star candle configuration of the red level. You can see the price went down multiple times. Went down. This is a 1 hour time frame, so at least we could have traded some 20 pips moves on those candle signals. So these are all signals which filter for our trades. Usually around those levels we would go in a trend direction, but what happens is that candle and pins around important levels can give a signal for trading counter trend or trading just in a different counter trend way. And also my next, so always watch out for candle configurations near the tops and bottoms, so you won't be caught in a false trend. Today that happened with euro dollar. Okay, green lines on this chart represent daily resistance levels. Red lines represent daily supports. This is 1 hour time frame. So look at those pins. Why I'm pointing out pins? Because pin bars are basically giving us a filter not to exploit false breakouts. So all of those pins are false breakouts. Just look at those levels of support and resistance and look at those pins. Look how the candles and pins perfectly filtered potentially bad trades, potentially false breakout trades. Just look at those. So if you want to be protected against false breakouts, use daily charts along with pin bars around important levels, so you won't get caught into a false breakout. Okay? So that can be also a very good signal, those pins, for not to take a trade. I think that we have concluded our webinar mostly with time, fundamental, and technical tools. Okay, and just prior to our conclusion of this webinar, you just need always to bear in mind that you need to always apply time and fundamental filters before any technical filters. Because if you go with technical filters, then you have already taken a trade, and it's only for that particular trade. But for a global view of the market, for whether you should trade or not, you only need to take account time and fundamental filters. Okay? Non-farm employment changes, NFP, we will maybe present again, we will have a webinar about NFP, because many traders ask me and Chris to repeat it, so we can do that. Okay. Okay, guys, thank you for being with us. Chris, you can call it a day.
Yeah, indeed. Sounds great. Looking forward indeed to doing the NFP one more time, or otherwise the next topic, which Not sure which one. Well, we in any case have our usual webinars, as you can see right in front of you here, with Tarantula next week, and live trading sessions with me as well, and then of course our usual one, same time, same place. So wish you all a great weekend, and still great trading still if you decide to trade, and talk to you soon.
Talk to you soon, guys, and see you very, very soon. Thank you very much. Bye-bye.